Hello, Chart Watchers, and welcome to this Monday, March 12th Market Watchers Live show with your host, Tom Boley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. We're certainly glad to have you. And for our regulars, welcome back. The action today, a little bit mixed. We see the Dow Jones Industrial Average down 114 points. The S&P 500 hugging the flat line, down 1 point. The NASDAQ, however, continuing its outperformance, up 30 points today. The Russell 2000 up less than 1 point, so it's continuing to rally as well. Been on a nice roll here over the last 6 or 7 trading sessions. The 10-year Treasury yield, not a whole lot of news out, and the bond market kind of flat today. You can see that the 10-year Treasury yield is down to 2.89%, down just a little bit more than a half of 1 basis point, really nothing so far today. The volatility index, you can see, is back to the 16 level, so it is up 9% today with some of the weakness that we're seeing on the Dow and to a lesser extent on the S&P 500. Among our sectors, consumer discretionary having a pretty good day, but you can see is up against the late February reaction high resistance at about the 107 level. So far, the XLY struggling to break through. Part of the strength in the group, though, is coming from the autos. You can see coming off this bottom where we had a flag pattern, a bear flag pattern in play. We are breaking back to the upside, taking out a little bit of resistance, so autos helping. Technology closed at an all-time high on Friday, continuing that push to the upside, leading the way. Computer hardware, Apple, having another strong day breaking out. You can see computer hardware made the breakout above its key all-time high resistance on Friday. It is continuing that strength today. The XLI industrials had actually broken out of a symmetrical triangle pattern on Friday, giving back much of those gains. And the big reason, and actually the big reason for some of the weakness on the Dow, Boeing. Boeing is a big part of both the industrials and the Dow Jones, and you can see Boeing down about 2.7%. I think it's setting up an opportunity in Boeing, to be honest, but nonetheless, we are down there, and that is having a big impact on both the industrials and the Dow Jones. And with that, let me bring in my co-host, Aaron. I don't know about you, Aaron, but this whole spring forward thing caught me totally by surprise yesterday. I was a mess all day long trying to figure out what was going on.
I know I always hate the spring forward. That's probably my least favorite. I didn't feel it until this morning when I had to get up. But yesterday I'd slept in and everything. I didn't even notice. But yes, and thank goodness, right, that our phones and everything will change the clocks for us, because I'd have been in big trouble otherwise.
Yeah, it was actually pretty funny because I normally, I'm normally up pretty early by 6 or so, 6 a.m. And I looked at the clock yesterday morning when I got up, and it, said that it was, 6:10 or something like that. And I can't help it even on the weekend. I just tend to get up early. And so, I wasn't paying any attention, went on about my day. And I looked down at my phone. It was funny you mentioned the phone, because the phone updates everything. And I'd only been up for about 10 minutes. And I looked down and my phone says like 7:10. And all of a sudden it was like, what? I don't know. I felt like I was in the Twilight Zone or something. Where'd that hour go?
Exactly.
I didn't realize it was coming up so soon.
Yeah, it surprised me too. So I was happy. I was happy that it's over now, and hopefully by tomorrow morning I'll be okay. But yeah, the getting up is always the hard part, I think, for that. But getting up to an interesting market, I guess, kind of.
Yeah, interesting market. And of course, over the weekend, me being a big sports fan, Tiger Woods on the top of the leaderboard actually had a putt on the 72nd hole to tie to force a playoff. So that was crazy good for me anyway. I enjoy watching Tiger. Great for the sport, and certainly for TV ratings. I know their TV networks are happy to have him back. But yeah, that was a pretty wild finish. He didn't quite get there, but shows that he's ready to compete with a lot of these young talented golfers that are on the PGA Tour. And then, of course, yesterday at, I don't know, 5, 6 o'clock, whatever, the NCAA announced its brackets.
Oh, that's right. Yes.
Yeah. So I don't know. I'm just going to throw it out there. First of all, I'm a Virginia Tech fan, but I'm smart enough to know Virginia Tech's not winning the NCAA tournament. I'm going to go with their arch rival. I've seen enough of Virginia play this year. Those guys can play some serious defense. I'm going to take Virginia. I don't know if you follow college basketball, but you can throw
Not a whole lot. Coming from University of Southern California, basketball has never been our big thing. And UCLA, of course, is fantastic with their basketball program. So I don't like to watch them just, run the tables all the time in the Pac-10. So I haven't paid attention in a while. But anyway, I know we need to get on with this show. We could talk about sports forever. And I know it was not a great hockey weekend. Let's put it that way for the Ducks. But there was lots of hockey to watch. Okay, what's happening this week? It's going to be a great week. We have everything stock charts coming up tomorrow, and I'm not sure exactly who's coming in, but I will find out for everybody. Greg Morris will be here on Wednesday as our special guest, and Julius DeKempener, the RRG creator, will be with us on Thursday to talk RRG. And then Friday, I'm going to be doing a workshop. I have not figured out what I'm going to do it on yet. Somebody suggested moving averages, talking about moving averages, so that's on my radar. But if you have any others that you are interested in, just go ahead and pop those into the survey when you take it at the end of the show. What's going on today? Monday Setups is starting off the program, and we'll give you our thoughts on that. Earnings Spotlight, John Hopkins is here to go over a bunch of symbols for us today. The 10 and 10 to 1, we're going to start off with, and I'm trying to remember, it's AIT, that's right, Applied Industrial Technologies. And finally, I will finish up the program with a DecisionPoint report. And you'll be interested in getting Carl's thoughts on this one, I think. And we are aligned for sure.
Oh, that's interesting. All right. I know you had some differences last week, or you were talking about how, you all were looking at the market a little differently. So you're aligned? You're back in alignment?
Yes, we're back in line. I think we weren't too far. We're never too far off. I mean, I learned pretty much all of my analysis skills, a lot of them from him growing up. So we do tend to have the same outlook on things.
All right. Well, let's jump into things here. First, we'll start off, excuse me, with the 10-year Treasury yield. It's where I always like to start with the bond market. But unfortunately, there's no economic news out this morning, and there were no earnings reports of significance. So the bond market was kind of on its own to do its own thing. So it decided not to do anything at all, really in a very tight range so far today, continuing this consolidation. But the one good thing from a yield perspective, and by the way, I think it's a good thing if the yields continue moving higher. I look at this very bullishly, because if the yields are moving higher, well, there's a couple reasons why the yields could move higher. If the yields are moving higher because the market is expecting a continued strength in the economy, and that we're going to continue to see, better jobs and more factory activity and all that. If that's the reason that yields are going higher, I think that's very, very bullish, because what that means is money is coming out of the bond market. And if it's for economic growth ahead, then that means higher profits for stocks. And that means that money rotating from the bond market would then move into the stock market. And that is generally what we see. Now, if the yield's moving higher because of the inflationary fears, and we'll get more and more data as we go forward on that, that's a different ballgame. But from Friday's jobs report, I mean, that was a great report. No matter how you slice it, we saw much better than expected jobs for February. January jobs were revised higher. And then the wage inflation component, the average hourly earnings, actually was lower than expected with a rise of 0.1%. The market was looking for 0.2. So really everything lined up for the stock market on Friday, and we saw the NASDAQ break out to all-time highs. And I figure that's where we'll go ahead and start today. Let's take a look at the NASDAQ. So the NASDAQ on Friday, you can see, did clear the January highs. So all of the selling that we saw at the beginning of February and the back and forth action later in February is now behind us. It's in the rearview mirror on the NASDAQ with a breakout on Friday. We saw a little bit of weakness earlier after a gap up. We went back down, tested the open. You can see We are now back near the high with the NASDAQ up 37 points. I think that this is a signal the correction is ended. I never really looked for anything more than the correction to begin with, but I think now that we're breaking out to all-time highs, very difficult to make the bear market argument at this point. Although the S&P and the Dow haven't made the breakout, but I like to see the aggressive areas of the market leading, and certainly with the Russell 2000, with the NASDAQ, I think that is the case here. I mentioned the Russell 2000, so let's pull that one up. Russell 2000 nearing an all-time high. We did get just above 1610 back in January. We went over 1600 today, got up 1603 and change. So that all-time high is in sight for the Russell 2000. Among some of the sectors, XLY, challenging. I mentioned this at the open of the show. 107, the resistance level on the XLY. We went right up to 107.03 earlier today. We backed off of it. I expect we're going to make the breakout. Just a question of when. Within consumer discretionary, I have a few charts that I wanted to show you. Home construction. I'm starting to grow a little bit more bullish this group after the huge move down and the failure at the 20-day and another move lower. It wasn't looking so great. But I do want you to see here at the bottom, we had lower prices. We had a higher PPO. That is a positive divergence. And now all of a sudden we're breaking above that 20-day moving average, which we had failed at previously. That is typical after you see a positive divergence. I think we're going to make a run at least up to this 880 area to see if we can get through there. Wouldn't be at all surprised to see this move all the way to the 50-day moving average, which is up near 900. That would be another 46 points from where we are right now, which is better than 7%, or better than, well, actually almost 6%. Need to get my math in tune here. But looking at maybe another 6% or so on the home construction, back up to that 900 level. We'll see whether or not we can get there. I think we will. A couple of other areas within consumer discretionary. Autos, I mentioned earlier, leading the pack. Well, we have a positive divergence here as well. We got lower prices, and we have a higher PPO. So we're coming up on this 20-day moving average. I expect we're going to go through it. Travel and tourism. This is home to Booking Holdings, BKNH, formerly Priceline. And we talked about the seasonality of Priceline. We've talked about that many times. Loves now through May, and I think especially through April. And we have been going straight up here on this index, breaking out above the double top that we saw around 720, 730 from back in October of last year, and then again in January of this year. And if we pull up Booking, you will see pretty similar chart. The gap up with earnings, heavy volume coming in on the earnings. And this has been pretty steady volume for this stock. 700,000 shares on a daily basis when you go back is pretty solid volume. So I see a lot of accumulation taking place here on Booking. And that is something that I think is worthwhile noting as we go forward. Let's see, what else? How about specialty retail? This one is very interesting because after the move to the upside, talked about this one last week. Looks like it put in a cup, came back down, potentially put in a handle. There's a couple of different ways to look at this, so I thought maybe I'd annotate this one. And first, let's take a look at what looks to me to be equal highs. I think that's pretty clear. So what we were thinking about maybe was this cup and a pullback, maybe putting in a handle near the 20-day. Another possibility here as we back off from that 1475 level is an ascending triangle. So another pullback to the 20-day moving average, I think would be pretty bullish. I think that this group is set up very nicely for a move to the upside. And I think this pullback probably, I think Netflix was one of the worst performers on the NASDAQ 100 earlier today. So that's certainly lending some problems to the group. But all in all, I think this pattern looks very bullish off of an uptrend. I see a continuation pattern here. I expect we're going to get a breakout at 1475. And when we do, measures up another 200 points. So that is definitely a group worth. This is definitely a group worth watching. Let's see what else we have. The XLI and the XLF. If you recall, this leg of the bull market that started back in November of 2016 was led by industrials and financials, and they were both hot on Friday on the breakout. The XLI did fail at resistance, and we are backing off of the 79 area today. but I still see an uptrend in play. We went back. We still have put in a higher low from Friday. I wouldn't be surprised to see a recovery here in the XLI today. And if we do, I think it would be bullish. A breakout above 79 really is what we're looking for here. The XLF, this is the financial ETF. This did make the breakout in both the XLI and the XLF, by the way, and I've noted this in my blog this morning. But here is your downtrending highs. Here are your uptrending lows. And we got a breakout out of this triangle on Friday, clearing the price resistance as well. I think the XLF is going to make a run back up over 30 to test the late January high. And ultimately, I look for a breakout here. A couple of other areas of the market. Biotechs, DJUSBT, made a big breakout on Friday, clearing both gap resistance from back in early February and then the reaction high at 2150. We did pull back earlier today, but we're off the lows. I expect that we'll see biotechs continuing to do well. Got to mention the semiconductors. This has been one of the strongest areas of the market going back. We've seen a lot of leadership out of this group going back the last couple of years, and we have gotten a breakout and continuing move to the upside. The stock that is helping to lead the charge, Micron. Look at the move today on Micron, another 10.5%. Just huge accumulation taking place. This is a very bullish development, I think, for the market. Last thing I wanted to mention, I did show that Boeing was having a rough day today, and that's been weighing on the Dow Jones and also on the XLI. Aerospace, by the way, is the worst performing industry group within the industrial sector. But I actually think Boeing looks really good. We did have higher highs coming across here with lower PPO readings, but as we consolidate and move down closer to this 50-day, you can see the PPO getting very close to centerline support. I think that Boeing is nearing a really good entry point. I expect that this is going to be another stock that will be breaking out sooner rather than later. And with that, let's go ahead and switch it over to Erin, and she's got some upgrades and I believe a downgrade for you. I'm not hearing anything though, Erin. Make sure your mic is on.
All right. Sorry about that. Just trying to get everything all ready here. Let's see. I need to go over here. There we are. So we had like Tom said, one downgrade, and then I've got 5 upgrades. I quickly annotated them, so it shouldn't take me too long to get through these. So Red Hat had a downgrade, and looking at the chart before I put in these trend lines, I thought it looked pretty good. And then I saw that rising wedge, and we've got the downgrade, and the PMO, though rising, is very overbought. So I would kind of stay away from this one. Maybe put it on your radar, because if it does pull back, break down from this wedge, and you got back down to that 140 level, or maybe 145 even, I'd probably be okay with that. But at this point, I would say short term, it's not looking too good. As far as ATVI, Activision Blizzard, we got that breakout from this ascending triangle, so that looks great. I'm on a PMO buy signal, and you can see it is not at all overbought. We still have plenty of room for the PMO to rise on Activision, and that breakout is very encouraging. And I believe, if I go look, I think this was an all-time high. Yes, we're working on all-time highs right now on Activision Blizzard. Broadcom, excuse me, our other upgrade. Nice gap up. And on an upgrade, I would probably consider this a breakaway gap. So I would be looking for higher prices. You can see that the PMO is now rising. It's almost above the 0 line. I would be a little concerned about this OBV volume setup right here. It's not exactly optimum, I would say, but you do have this bottom and that bottom. They are, we're still getting rising bottoms from that. So I would be looking at a target around 275. Obviously, your stop area would be right around 255. And let's see, what do we have? Bristol Myers, and I think this one was actually requested for 10 and 10. So here you go. All right, so I was looking at a declining trend channel today. Actually, on Friday, you can see it closed just above that. And right now it's trading above that declining trend channel. So I think that's all positive. The PMO faked us out a little bit with a sell signal, but that was probably a good thing, because we're getting that whipsaw. We're getting it to turn back up. We've got overhead, the overbought area is still pretty far away. So I think this one looks pretty good. With that breakout, I'd be looking, of course, toward that 70 area. as a possible target. Regeneron Pharmaceuticals. This one has a really nice rounded bottom, and I've got the PMO buy signal going on this. Momentum is still carrying upwards, albeit a little bit slowly. And, I like that rounded bottom, like I said, but you're looking at 360 as some pretty serious overhead resistance here. So I would look for that breakout. I think you're going to see that breakout, but I don't know if I'd want to take this risk right now to get in there and hope for the breakout, but an upgrade certainly is going to help. Sarepta Therapeutics, and as you can see here, PMO buy signal again, and a nice breakout. It's still continuing higher. This looks really nice, and if you take a look at the weekly chart of this, you can see it is also making new all-time highs. While the PMO is a little bit noisy here, it is still on the weekly chart moving slowly upward. So, and of course, it is definitely far from being overbought at this point. So those were our upgrades and downgrades. And at this point, we're going to go ahead and move into our Monday setups. And I guess first we want to look at how we did, right? So here are the ones we picked. Let's see. There we go. So I had CACC at 328. I'm not sure what that's looking at like right now. It was doing all right, and then today it kind of pulled back.
Yeah, we got two winners. I mean, CACC 334.14 right now, so it is up 1.79%.
Oh, all right. I'll take that any week. And how about yours, though?
ABAX had a very good week and actually is having a really good day today. So it is at 74.12.
Ooh.
Which is 7.54%. So
dang, that's a nice tidy profit for 1 week.
Yeah, that one works. I'm still trying to get my mojo back. So we'll see if we can keep it going because we're only as good as our last pick. We got new ones coming up this week.
Exactly, and I'm feeling really smart right now, I have to say, because I did get into Micron last week, and as part of a long-term hold. So I'm pretty happy right now. Hopefully it'll keep it up and technology will keep moving. But what do I have for this week? Do you want to go first or shall I?
No, go ahead. Take it away.
All right, let's do this. Okay. I will share my screen here. Let's go over to, I have this in my regular account. Yep, there's our Monday setup. So that was last week's pick. And let's see, let's get this into the right view. There we go. So yeah, I do have that chart right here. So not too bad. I was saying recheck it at 340. Not quite there yet. So I think there's still some more to go. I'm going to not show you my actual pick. We'll start with one I almost picked. And interestingly, and I don't know if this person ran my scan this morning, but the first symbol that I had requested was Applied Industrial Technologies, AIT. So when I went in and ran my scan and found it on there, I thought, oh, this is pretty interesting. And it was almost my pick. Just didn't have everything going for it exactly the way I want. But you could see that double bottom. We've got the breakout. I didn't like the fact that at this point, it's kind of that shooting star sort of setup. It went way up and after this breakout, but it's already pulled back down right into the right toward that support level. Now that could be a pretty interesting intermediate term trade because we've got the double bottom. The expectation would be a move about the size of this pattern. So you could still, get in here, but just be aware. I don't like the PMO bottoms that are declining. That's not a good sign. But at the same time, high scooter and OBV looks pretty good. So the only reason I didn't really pick this one was actually the fact that my PMO bottoms were declining. And the main reason is I found a stock that had all of everything that matched. So that's why I went with the other. Right now I'm seeing an ascending triangle on Electronic Arts. I see that since I picked this one for Monday setups, the PMO is trying to turn down below its signal line, which is certainly not something you want to see. But, this is a positive pattern. This is a bullish pattern. The expectation should be a breakout above that 130 area. But it looks like maybe it just needs to come down and test this rising bottoms trend line maybe one more time. and WW Granger. And this one I saw also an ascending triangle. This rising bottoms trend line is almost flat. So you could almost make a case for just a consolidation zone here. But the main thing is it did break out from that zone. The PMO is just about ready by 1/100th of a point to make a PMO buy signal. Rising bottoms, decent scooter. The only reason I didn't pick this one is that there is some overhead resistance to get over in the very short term, and with a very short term pick 1 week, I wouldn't do this one. The one I did go with, and I believe this one might have also been requested at one point or another today, was Invacare Corp. And like I said, it had pretty much all the things I was looking for. Granted, the scooter is starting to trail off, but again, this is a short-term trade. We're looking at a 1 week trade, so I want to make sure that I can maximize all of the profit, etc., to beat Tom next week. Very important. So anyway, we have that declining wedge. That is a bullish pattern. We got the breakout from that pattern. I like that. I would set my stop, as you can see, right around that $18 range. Again, this is a pretty short-term trade. So if I wanted, I could maybe drop it down to that 50-day EMA, maybe a 1750 stop. The only issue, of course, is we do have to get over this area of overhead resistance. But with a PMO that is bottomed, and look at that rounded cup here as far as the PMO, it's a nice hook upward. Not a noise. It's not going to be a noisy buy signal. If we get that buy signal, you can see the rising bottoms on the OBV in the short term. So I thought this one looked the most interesting. And I just put a target at about 20. And I just based that on the fact I had to stop at 18. I figured that looked at about right for me to do my recheck. But I would probably watch closely at that for that $19 range as well. And that was my pick. So what did you have on your Monday setups? Did we have any that overlapped at all today?
No, we didn't have any overlaps, but I did like your GWW chart because that is on my strong earnings chart list. So you can pull that one up. But I liked it on the 50-day test. When it came back down, it was very close to support just like 5 or 6 days ago.
Mm-hmm.
And I had an order in to buy it, and it just missed. I had a limit order. I should have had a order in. But it was getting close to that other low, and that's where I had an entry onto GWW, but I never got it. So unfortunately, I didn't get that move to the upside. But I do think, first of all, those 2 volume bars on that move higher about a month and a half to 2 months ago, right in there, that's a pretty good sign. When you see 2 volume bars like that and the stock just shooting up, there's a lot of demand for the stock. So when it pulls back and gets into that gap support zone, I think that was a pretty interesting area. Yeah. But I've traded it before, but unfortunately I didn't get it last week or week and a half ago when it was at the 50. But oh well, we move on. Can't get them all. Okay, so I'm gonna start this week because last week I ended up going with ABAX, which I picked for a couple of reasons, and we talked about this last week. But if you look at the medical supplies index, this is the index or the area of the market where ABAX resides. And you can see a week ago, it didn't look all that great on the medical supplies index, but we had lower lows and we also had the higher PPO. So we had a positive divergence in the group. And when we looked at it on a weekly chart, I was actually very bullish this group on a longer term basis. So the short term was actually a positive. You can see on the longer term basis, we had higher highs, we had lower PPO readings. And as a result, a lot of times we'll get that 50 period test before we start moving higher. So I thought the long-term chart in the overall group looked good. And so if I like the group, then I start looking at stocks within the group. And ABAX was one that I had on my strong earnings chart list. And so this was one, and I think another one that I mentioned last week, which was Align Technology, ALGN, also is in this space. But if you pull up the relative chart first, you can see that the overall group, medical supplies, had been downtrending. So maybe at first glance, that didn't look very good. But again, on that weekly chart, it actually was holding at the 50-week, which I thought was very bullish. And then you can see that over the past few months, we had a lot of relative strength in ABAX relative to the medical supplies group. So, and versus the S&P 500. So I kind of felt like if we started to get that bounce and got a relative, showed some relative strength in medical supplies, that ABAX would work out. So fortunately it did. This week I'm going to do something pretty similar, but before I get into it, I did want to just bring up this strong earnings chart list and just show you quickly one thing you can do. So if you like a group, for instance, the medical supplies, and you have a chart list that's already established, and I pick the view all and go into the summary, it's got a search table over here. And if I type in medical supplies, here are the stocks in my strong earnings chart list that are in this group. So you can see ABAX. The scooter's not in here. Let me see if I can bring up the scooter. Okay, so here you can see the scooter. So you can see that ABAX and ALGN both have really strong scooters up in the 90s. So among their peers, they were both pretty good performers. So the pullback I thought was a great opportunity, especially since I liked the overall index. Well, this week going in, I really like home construction. So I thought what I would do is just kind of pull up the home construction, and I'll show you that index in just a minute. But there are 3 stocks on my strong earnings chart list that came up. So I'm going to go with WLH. This is my stock that I wanted to go with this week. It is currently at $26.75. So we'll go with that price. And I didn't pick up the price on yours. I don't know if you got that or not, Aaron, but need to take a look and make sure we get that. But yeah, the WLH, I'm just jotting this one down so I make sure I remember. 26.75.
Yeah, 1850 for mine, IVC.
18.50 for IVC. Okay, so WLH, you look at it and you think, well, you know, it's kind of this downtrend, got a little bit of a flag, but I want to show you a couple things that kind of stood out to me. Actually, before I go into the relative chart, let's pull up the home construction index. And here we have lower prices, higher PPO. So we've got that positive divergence. And now, actually on Friday, we managed to close above the 20-day moving average for the first time since this downtrend started. And actually today, we're now clearing it. So I think a run up to 880 is very possible. And I actually believe that we're going to get this center line reset back to the 50. And ultimately, I think home construction is going to take back off again. So I like the group overall. And if I look at the weekly chart, again, it's been struggling. It got all the way down below the 20, but it's gotten close to the 50. It hasn't gone below the 50-day. We had a huge move in this group, as you can see, over about 3 or 4 months. So I give it a little bit. I mean, let's give it the benefit of the doubt here to pull back and have a little bit of consolidation. But the daily chart now is starting to tell me that we could get a little bit of a run. And if we do make it back up to the 900 level, I think it would be very significant because we'd be clearing the 20-week moving average. So this is going to be a key area to watch. Now let me go back to WLH again. And let's take a look now at the relative chart. This one doesn't look as good as ABAX, by the way. But here's your chart on WLH. I think we had a lot of consolidation coming across here around 24, 25. And notice we went just below 24 before we started to turn back up. So I think we're kind of bouncing off an area of price support that I would expect. Here is the home construction, which we just talked about. We're starting to see some strength here. And then we go down here. We're beginning to see a little bit of relative strength between the WLH relative to home construction. But if there's one thing that maybe is a little different, this one versus ABAX last week, is that we're not seeing as much relative strength. We've actually been declining on relative strength for a while. Although with some big moves higher on volume here at the end of October, and then again as we started the new year, huge moves up on heavy volume. Both of those resulted, as you can see, in some pretty significant outperformance. So I think this one's got a shot to maybe resume back to the upside. Relative to the S&P 500, it's been certainly weak because the overall group has been so weak. But I think if we clear this triple top right here, we could see some serious outperformance from WLH. And again, home builders, home construction as on a relative basis to the S&P has not been performing well, but that positive divergence, I think, sets it up for continuing outperformance that we've seen over the past couple of weeks. So that's kind of the reasoning behind the WLH pick this week. I do think we're in a weak group. So if the whole group starts to roll over and the 20-day moving average is lost on the DJUS HB, then I might have second thoughts about WLH. But in the meantime, I think we're going to run. I think we're going to run up through these recent highs, test the 50, and ultimately a break above 28 would be very bullish for WLH. So that's what I would be looking for.
I actually see an ascending triangle, which is also very positive. So it's really leaning toward the breakout.
Yep. So we will see whether or not we get it there. A couple of other stocks that I'll just mention quickly. KBH, also in this group, is coming up testing the 20. This one I didn't go with this one because it did have lower lows with a lower PPO. So I didn't see the same, relative strength in KBH. So I wanted to, I like it because I think the overall group's going to help lift it, but I didn't like it as much as WLH. A couple of others, I actually like ROST a lot. Ross Stores, this was a close second for me. They did just report better than expected top and bottom lines, but they got a negative reaction, but held what I think is key support. So I would be watching 74.75 as really good support here on Ross Stores, and I think we're going to make another push initially for this triple top up near 80, but I think we're going to make another run eventually at that 85 level. So I like Ross Stores. Chicos, CHS, another one after gapping up on really strong volume, went from 865 or so up to almost 1050 that day. Failed on the breakout. You never like to see that long tail above resistance. And then we came all the way back down, and look at that hammer. Well, not really a hammer, but definitely long tail below. Looks like it was going to take out support, and it held. And now we're starting to rally back off of it. I think CHS could make a move here. The problem with this one, though, is the long-term chart. If I just pull up a weekly on this one, you can see the longer-term chart has me a little concerned. We got a nice short-term uptrend in play. I'd be real careful if 850 doesn't hold, though, on CHS. And then the last two, I'll just mention IGT. This is International Game Technology. I mentioned this one last week, talking about earnings. Big, heavy volume gap up, taking out that prior high. I think we're going to move higher from here. I think we're going to consolidate maybe, but eventually I think we break above 30 and set some new highs. TJX has been pulling back, and I like this one, getting back down toward the recent low after earnings. Here's a gap up with earnings. Very heavy volume. This stock gapped up from just above 77 to 84. That's a huge move to the upside. We're consolidating, but I think we'll make another move for that 84.5. I love it on the 20-day moving average if we get down there. And with that, let's summarize our setups for today. And you can see right there, Erin's symbols, her pick, IVC for this week. My symbols and my pick, WLH. May the best trader win.
The best trader win. Yes, we shall see. I think we've done pretty well. You know, we started this show, gosh, almost a year ago now. It's hard to believe that, actually. And we've done really well. I mean, I can only think of just a few weeks where we just had some really bad picks. And those were actually during during this last couple weeks when we had the big decline.
Yeah, I think, obviously I think the picks have been good as well. And for the most part, we've had a very good market to work with, and we've been trading on the long side. That has definitely helped. Absolutely. And I agree that, the whole volatility thing in February, I mean, I even, in my blog, I normally put in trade setups or Monday setups on Monday of each week. And there were 2 weeks in February I didn't even put any out there because I thought it was too volatile to get too involved in the market. So.
Absolutely. Yep.
All right. Well, we are going to move on to Earnings Spotlight. This Earnings Spotlight is brought to you by EarningsBeats.com. EarningsBeats.com is a trading service designed to provide high reward to low risk trades. This strategy resulted in a 2017 risk-adjusted return that outperformed the benchmark S&P 500 five-fold. EarningsBeats.com only trades companies that have beaten Wall Street estimates as to both quarterly revenues and earnings, and they'll teach you to focus on that combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. EarningsBeats.com, better timing, better trades. And with that, I'll bring in my former partner, good friend, John Hopkins from Earnings Beats. How are you doing, John?
I'm pretty good. How are you, Tom?
I am doing good. Did you get up on time this weekend, yesterday, with the whole spring forward thing? Did your wife have to wake you up?
Okay, well, you know me well enough to know that I'm an early riser.
Yes.
Okay, so to be honest with you, it was a question, am I going to be up at like 4 or 5? So you're probably just getting to bed.
No.
Those days are over.
That was years ago. That was back before I started at Stock Charts. I started writing the Trading Places blog, and that completely changed everything. Now,
No, I got through it okay. I think I woke up, like I said, maybe an hour early, but it didn't really faze me that much. And then I don't know about you, but I was, excited about watching the golf yesterday.
oh my gosh, I loved it.
Do you know that the ratings for I don't know what Sunday came in at, but the ratings for Saturday, I think, were their highest in like multiple years. Mm-hmm. And I'll tell you this: I've got Siri, the satellite radio in the car. I had to run some errands. I don't know the last time I listened to golf on the radio.
Yeah, I don't think I've ever done.
I mean, and the funny thing is when you listen to it on the radio, you can hear that whispering. He's coming up to the 12th hole here, and you're sitting there thinking, are these guys like just making that voice to make it sound, can they really hear them, from the broadcast booth? But this is what Tiger does. He just brings everybody out.
Yeah, there's no doubt. It was very exciting. I think the crowd, the attendance at this event just blew the numbers out of the water. I mean, everybody wanting to get back in. First of all, I don't think Tiger actually had played at Inverness in many years. I don't remember if it's like 17 years or 20 years or something like that. So he hadn't been there in a while. And then, of course, his whole comeback thing. I mean, everybody was there trying to capture it. And if that last putt had gone in on the 72nd hole, they may have set some kind of noise record there. Probably would have, you'd have seen, I don't know if you ever saw Caddyshack. Did you ever see Caddyshack?
Oh, yeah, of course.
With everything, Bill Murray doing the whole dynamite thing, everything blowing up. That would have been the crowd's reaction on Sunday, I think, if he had sunk that putt.
Hey, speaking of Bill Murray, and then we'll get on to the market. This is what people really want to hear today about the market and earnings. But got to give a shout out to College of Charleston down the street, from me. They're in the NCAA for the first time in 20 years. And the reason I mentioned Bill Murray is he keeps residence in Charleston. Oh. And so you could see him very prominent on the floor when Charleston finally pulled out the victory. Now, whether or not they go any further, that's another question. But yeah, he's very prominent, and he even owns a piece of the minor league baseball team here.
Wow.
Yeah.
Got a lot going on. I mean, we're chasing squirrels all over the place right now.
Yeah.
We're going to get back into the market here, but
yes.
I did mention before we do, I don't know if you listened in at all on the strong earnings chart list, but establishing that on Friday. And first, I want to thank you because I know that John did change the offer at Earnings Beats. If you wanted to try a trial there, he actually late last week agreed to do a 30-day free trial. And I don't know if you've ever done one of those or not before, but included in that was sending out the Earnings Beats candidate tracker, which is identical. We sync those up. And so his list right now is identical to my strong earnings chart list. Mm-hmm. And anybody who signs up is getting that chart list. Well, you have to be a Stock Charts member as well.
Yes.
But he is sending the chart list. So if you want a chart list that I just showed where I was typing in the home construction and the medical supplies and bringing up those
companies,
there's, I think, 250. I think it was 250 companies on that list.
Yes. Right? Yeah. As a matter of fact, Tom, just, for people who weren't listening to a Friday trying to figure out what we're talking about, what we do is we scan the market for companies that beat earnings. And if they beat earnings on the top and bottom line, and they have charts that look, decent, hopefully good, they have certain volume requirements, etc. We add them to what we call our candidate tracker, which is comparable to the chart list that you referred to. And the offer we made was anybody who wanted to get their hands on these 250 stocks, by the way, of which 100 fresh stocks were added just this morning. So there's 250 total. If you just go to earningsbeats.com, you'll see and go to where it says About Us, you'll see up on the top, there's a trial offer up in the top there, next to the member area, up all the way up.
Oh, I got you.
Yeah. And I tried to come up with the best price, and I couldn't come up with anything better than zero. So
yeah, that's a good price.
It's a good price, and I'll tell you something. It's just it's a way to start understanding. Because let me tell you something. This is something we've been doing for about 4 or 5 years now, and we have found consistently, Tom, over the years that company. And I have a couple of stocks to go over with you to show you what I'm talking about. Who recently reported the earnings, and we'll take a look and see if it mattered. Okay, but you can get an appreciation for the fact that people gravitate to stocks that have strong earnings. And the way we look at it is if we identify stocks that beat earnings expectations and we're patient, they're going to pull back to a level that presents a high reward to risk ratio. And that's what we're looking for. We want to enter them when they pull back to key support areas and exit them hopefully with a profit, or if it goes against us, it'll be a minimum stop. And over the past year, to give you some perspective on all the trades that we were involved in, the average profit on one of our on these stocks has been about 6.2%. The average loss just over 2%. So there's quite a big difference. And it's the stop and being defensive that makes all the difference in the world.
Mm-hmm. What do you have some stocks for us?
I do. I want to go over a couple of stocks here that are unbelievable. PANW. Let's pull that one up.
Yep.
Take a look at the stock that beat earnings. Okay. I don't know. It's up. If I was conducting a class right now, and somebody said, look at this stock, it's up 2 weeks in a row, look at the mountain down below, look at the stochastics, RSI, there's no way humanly possible I could recommend they buy it. But what I would say is, man, if I can get this thing to settle down, maybe, boy, wouldn't it be wonderful to pull back to the 20-day moving average, which would still keep it very intact. You could have a tremendous reward to risk opportunity. And if it pulls below that 20-day, which it hasn't been below in a long time, you get out. Mm-hmm. So, you reduce your downside risk. And I think in a case like this, you'd have a 5 to 7 to 1 reward to risk. That's one stock. Mm-hmm. Netflix, that stock has been parabolic. It's finally settling down to, why it's settling down today? Because Citron Research, Andrew Left, who's a short guy, came out and said he was shorting the stock. And it also has just taken off. It needs to settle down a little bit.
Yeah,
it's gotten ahead of itself.
I would just offer him a very nice good luck with shorting Netflix.
He's shorting it. He's got a 300 price target. It's not a long-term short. But anyways,
I'll show. Yeah, that one I'd be okay with. But if he's long-term, this stock would not be a long-term. My long-term short.
No, but take a look at this one. If it pulled back to the 20-day, it could be a high reward to risk trading candidate. Here's another one, Cisco, right? Old guard.
Yeah, I love Cisco.
Look at Cisco, right? I mean, it's playing with the big boys, mm-hmm. And it could break out like even further here. Mm-hmm. But I like it if it pulls back to the 20-day. I think it have a lot of support down to in that level. And to me, this would present, good opportunity. And let me just give you a couple of others. I want to talk about a stock, NVDA, which, by the way, when it got down to the 50 recently, we issued an alert to our members right in that range. We had a price target on that stock of 248. Mm-hmm. We got out of it Friday with profits. It's exceeded that level, but I don't really care. I don't care if we take profits if it continues to go higher. That's meaningless to me, right? We made a nice score on it, and that was by being really patient and waiting for it to pull back to the 50-day. We had a very tight stop on it, and we ended up with a nice profit. And the last one, this is sort of a lesson, INVA. This is a stock that we put out. It was consolidating in at the 20, and we decided to get out of it last week because it was stalling up in that 1640, 1650 range, mm-hmm. And the market was just zooming. So I said, let's take our profits and get out of this, which we did. And you can see what's happened, since then. And it's one of those cases, if you get involved in a stock and something changes technically, you shouldn't be afraid to take your profits, sit on the sideline, and not worry about it. And that's the importance of the stops as well, because we don't have time today, but I could show you so many examples of stocks that we had a very tight stop on and we got out and they continued down 10, 15, 20%.
Well, I own INVA, and I wish I'd gotten your alert, because I actually I had a sell order in, and I think it's 1675, and I think on Friday it got as high as 1665.
Yeah.
Didn't execute, so I wrote it back down today. So I'm on the coaster ride. But I actually think, it's pulling back on light volume, and it went below the 20, but holding. I think as long as it holds that 15 area.
And our last stock is Sienna, which is our chart of the week. I do a chart of the week. And Sienna, it's got to pull back. Look at that stock. You talk about beautiful, right?
Yep, love it.
And, if it pulls back like to that gap bottom, right around there, I'm all over that. Because if it starts falling below that, I'm just going to get out.
Mm-hmm.
But if it reverses back up again, which I think if the market's strong, this stock's not going away.
Yeah, most stocks, first of all, when they gap up, you have to understand that, market makers provide liquidity on both the long and the short side. So when everybody's buying, they're on the other side. If there are no sellers, they're the ones on the short side, which is why most companies, when they gap up, they do go back and fill the gap. When I find a stock that gaps up like this on this kind of volume and keeps going up like this on heavy volume, it's telling me that the demand is much greater than market makers even anticipate.
Oh, yeah. Mm-hmm.
There's a lot of accumulation taking place. And I agree. If you get back down to the top of that gap support, that would be the number one entry area for me.
Yeah. Anyway, so the whole key here, Tom, was, we search for stocks, beat top and bottom line, and then patience becomes the biggie. You're very patient, wait for it to pull back to a key support level, technical price support, get a reward to risk ratio of 3, 4, 5, 7 to 1. If it goes against you, you just get out, and let it be. If it gets near your profit target, you take it. That's the whole formula.
No doubt about it.
All right.
Thanks again for stopping by, and we look forward to talking to you next week.
Thanks so much. Bye-bye.
All right. There he goes, John Hopkins, president of earningsbeats.com. It's always good to get a reminder on patience. I know it's, you look at stocks and they're going up and they look like they'll never come down. And I can promise you when the top hits, Aaron, that's when I get in. If I chase that. So I just have gotten in the habit. I just will not buy. If I see a stock, John mentioned the mountains. Well, when I'm looking at, say, the RSI, if those mountains, if we're above 70, I can't even remember the last time I bought a stock that had an RSI over 70. I just won't do it.
Yeah. Do you happen to know if John recommends stocks right ahead of earnings? I'm guessing not, since you.
Nope. He and I were working together back in 2013 when we created Earnings Beats. And the whole idea is to wait until companies report their earnings, see how they trade. And then if we like them, we put them on what I call now the strong earnings chart list. And then I just simply wait. I'll wait until a certain area of the market, backs up to a point that looks interesting. And then like I did in the setups, I'll pull up stocks in that chart list within that space to try to find something that I like. I'm not going to force the trade. If I don't like it, I won't look at it. I won't trade it. But I think there's a lot of power behind trading stocks that are performing both technically and fundamentally above, most of the other stocks out there.
Absolutely. No, I think it's a great way to go. I do my searches are pretty much just the S&P 500, 600 is kind of where I do my scans. But it makes a lot of sense. I don't know if I have the patience, but at the same time, if I get that chart list maybe from John, I might be able to start doing that without doing all the work. I thought that was pretty nice.
Yeah, I think it's a powerful list. It is nice. I know, from having worked there for a couple of years before I came on board at Stock Charts, and then, just keeping in touch with John, I know that is not normal to have a 30-day free trial. So, and send out the chart list on top of it. So
exactly.
Nothing to get those 250 stocks. But anyway, let's move on. I know you've got we got 10 and 10. What do you got there?
Yes, we do. I just pulled up the candle glance just to see what's been happening in the last 2 days on some of these stocks that we have. But I'm going to show you the RRG because it's always kind of interesting to see what's going on with that. There we go. I'm going to make it daily just so we get a. All right. And, you know, everything's pretty much trading very close to relatively to the S&P 500. That's what we're checking here, the benchmark, which is right in the center. And, you know, I'm looking at this and I would say, you know, obviously Micron is sticking out for sure. I would like to look at these blue ones though, usually. So GDI, I'll probably add that one. And I think that is PGAL, PGAL. So we might be looking at that one too. I think that was pretty interesting. And then I have a few that were especially popular in the chat room. So I will add one or two of those. And let's get started with AIT. And I know I did go over it at the beginning of the show, but you know, do you see something different with your indicators?
Okay, well, I've already annotated this one just to kind of speed up the process here. I think you got really good support down 66 to 68 area. I think you've been trending higher, which I think is very bullish, sideways consolidation. Short term, I'm a little concerned because earlier today we did get up to 75.40, which was clearing all of these highs. And so far we've pulled back now and we do not have the breakout level anymore. So when I get a false breakout, that makes me a little bit nervous in the short term. You can see today's volume is only 41,000. So we're not really seeing the volume that would support a breakout like we normally have. So I'm a little concerned near term, but let's see how we close. If we can get some volume coming in and close back toward the top, then I'd be much more bullish in the near term. Otherwise, I'd be looking for maybe a pullback to the 20-day. But overall, I like the chart. I just don't know if I'm ready. I wouldn't jump on board if we fail to make the breakout today.
All right, let's see. Let's look at FSLR, First Solar.
All right, First Solar. I think this one's listed as a semiconductor company, but it truly is in that renewable energy space. I do like the breakout. Renewable energy, by the way, is having a strong day, and we are breaking above the recent tops that we had struggled. You can see after moving down here and failing to hold, this was like some prior lows over here, and you can see how we really struggled to get back through. Well, today we are getting through. Unless we leave a long tail where we go back down and close below 68, I really like the action here in First Solar. I love the PPO coming back up, crossing over the center line. I think bullish price momentum starting to pick up. And so I like it as long, again, as it holds above that 68. I don't want to see a false breakout above all these highs and go back down and close below 68. I don't think we're going to do that, but that's what I'd be watching here. I think it goes higher.
All right, let's see. The next one is that PGAL, Portugal ETF, I believe.
All right, PGAL, another one making a breakout above recent highs. And I think longer term, this is a pretty big level as well. So if we go back to where we had the highs here, you can see we made a big breakout, gap up, went back, tested it, went higher, came down, gap down on very heavy volume below this level. Double top trying to get through. Today we're getting through and some folks are interested. This is not usually a very heavily traded ETF, but we are seeing interest in it today with this gap up. I think this starts another uptrend. I would look for that rising 20-day moving average to continue to provide good support here.
All right, let's see. Let us do Corcept Therapeutics, CORT.
Yeah, I think this was earnings related here on the gap down, and we went down. We took out prior lows. I've got some issues here in a couple of different places. So it is rallying nicely. If I was in it, I'd probably be thinking about taking some profits. You've got the bottom of gap resistance first that'll come in at 19.5. The reaction high just recently intraday was at 18.5, and we're trying to get back through this candle body resistance a little above 17. I'd be real careful here. If we fail to hold above that prior high and move back down and can't hold that rising 20-day moving average, to me, that would be a false move to the upside and a pullback. Now, the one thing I think it's got going for it is we do have a slightly lower close here, it looks like, with a higher PPO. So maybe we will make this run up to the 50. I just don't know that we're going to get through this 19.5. So I think it's a little fuzzy whether or not we get a little bit more upside movement. Closer we get to 19.5, though, I would be out and waiting to see if we can make this breakout above that 19.5 level at some point down the road.
All right, let's see. How about BlackBerry, BB?
I haven't looked at this one in a while, but I know it did have a really nice chart pattern. It's starting to strengthen again. Volume coming in on these moves to the upside. I think all of that's good. I think as long as it continues to hold its gap support, which it's done now a couple of times, there was the gap. You can see right in here, look at that, was the heaviest volume outside of this late September period. This was the heaviest volume on the chart on this gap up. Notice when we pulled back, we didn't quite get back down there. Here on this long tail, we didn't quite get back down there. I think we're in a pretty wide range on BlackBerry, and this one is somewhat volatile. But I would say, what is that, maybe 1090, 1085, up to about 1440. I think that's your trading range. We're sitting pretty much in the middle of it. So if I got in here, I wouldn't be using this as my stop. I'd probably have to draw maybe a trend line or maybe use the recent lows at about 1190 and then use the target as price resistance at 1440. I wouldn't want to use this as my stop because if I'm getting in at this level, I think you can see that I've got more downside than I've got upside if I'm going to use my target at 1440. So I'm okay with BlackBerry. I do like the trend here. I just don't know that I'd be able to set up a solid reward to risk trade at this point. So I'd just be watching.
All right. Let's see. Next one, Booking Holdings, which is BKNG.
Yeah, formerly Priceline, and mentioned this one earlier, and it is just on fire. I love it. It's overbought. I wouldn't be entering it. This is one similar to a couple that we talked about with John Hopkins a minute ago. I would just need to see some sort of a pullback, maybe to that rising 20-day moving average. That was the prior high that we gapped up above. There's our reaction low. And then when we broke back out above the earnings gap up here, I think 2050 would be a nice pullback at some point. I just don't know when it's going to be. And you can see the rising 20 coming up underneath that level as well. So that would be a key area of support for me. And I'm going to go ahead and wind that one up. But I do want to just show you quickly, for those of you who maybe haven't seen it, we've shown this many times. But if you go into the seasonal chart on BKNG and pull it up, this is one of the most amazing seasonality charts that I'm aware of. I mean, you can see February, March, April are just huge months for what was formerly Priceline. And you can see that the average gains per month are just ridiculous. This is not annualized. These are average gains per month over 20 years. So we are in the sweet spot. And I talked so much about this one at the end of last year. I think when they had disappointment back in September, I said it's time to get out, because when you look at September and what this stock does at the end of the year, I said it's time to get out, check back in at the end of the year. Well, that's about the time we started to see another big move here in Booking. So I think the stock looks really good, but it's very overbought. I wouldn't want to chase it.
Yep. And I do remember for those regulars who watch the show, you did show that in, I think, December or January, the Priceline seasonality. So y'all got warning.
I think it was actually a don't ignore this chart when I was posting to that blog. I think it was back in September. I wrote one on Priceline and said, you know, stay away and maybe come back and check it at the end of the year.
Yeah. Schnitzer Steel Industries, SCHN.
Oops, didn't mean to do that. All right. Well, of course, steel's been on fire. We're getting a big move here on Schnitzer today. Volume, you can see picking up. We're only about halfway through the trading day, a little bit more than halfway, and you can see it's one of the heaviest volume days that we've seen in the past month. So this is all good news for the stock. I think we're going to make another run here for the 38.5 level. I'm a short-term trader. I like to take profits when I hit resistance, and if it breaks through, I can always get back in at some point down the road. But I've just seen enough of these where it can be very frustrating if you get in and you get all the way to resistance, you hold, and then you go back down, and it ties up your capital for a long time. But ultimately, it gets down to whatever is your preference for trading or investing. Schnitzer, though, huge move up on very heavy volume, clearing this prior price resistance. So I think we're going to make that 38.5 price resistance on this move to the upside. And so I'm still bullish the stock and the group, but that's more, you know, we talked about steel recently, Aaron, looking out the balance of the year, and we do have some overhead resistance on the steel index. So you want to keep that in mind. And I'm talking about on a weekly chart. If we could get through that level, and Schnitzer breaks out above 38.5, this thing could really be off to the races. So those are two things I'd keep in mind.
Absolutely. All right, the next one is Kirby Corp, and the symbol is KEX.
Another one I think looks kind of interesting. We've been sideways consolidating off of a move to the upside, which I find to be very bullish. Let's see if we annotate this one. The resistance, I think, is pretty clear, and we are approaching it. Volume's going to need to pick up to confirm a breakout, but to the downside, I think that the price support, we got this hammer to print off of a 50-day test right at price support, and we continue to consolidate in this range. So 72 to 78.5 is the current range, and we're just above 78 now. This is one of those that I think, as we tried to make this breakout, and this is another perfect example of a stock that was breaking out intraday over these prior highs. We failed on the close, and look what happened afterwards. That's why I get really nervous when I have a breakout intraday and it doesn't hold into the close. But I think this one continues to consolidate. Eventually, I think we're going to see a breakout rather than a breakdown. But I couldn't be jumping in here just yet with it sitting right below resistance and fairly light volume so far today.
All right, last one I have for you is Canada Goose Holdings, GOOS.
GOOS. This used to be on my strong earnings chart list. I think it was probably back with this move, because this maybe looks like they didn't have very good results in February. So, I think there are better stocks out there. We had a negative divergence, higher prices, lower PPO. So let me annotate that. If I was looking at this stock, this would be one thing that would probably have my attention. Just the fact that you do have a lower PPO reading with higher prices. And so that normally is not a good thing. Of course, going into earnings, I throw most technicals right out the window. I think with earnings, it's a whole different ball game. I think anything can happen after earnings. But what you see is a lot of selling on very heavy volume. We broke back in a little bit to this gap resistance zone and then back down again. What I would really be concerned about is if this price support level right here fails to hold. So for now, I would maybe use that as a trading range. But if we close below $30 and you see the volume pick up, I would be out.
All right. And that concludes the 10 and 10 to 1. Not too bad. 5 minutes after, I think we did pretty good. And the symbols that we covered, I will have these up in the Market Watchers Live chart list, which you can find if you go to the blogs tab. Go to the Market Watchers Live blog, and you'll find the link at the top of the blog page.
There's only 9 of them.
Oh, I wonder which one I missed. GDI. I think that was the one I missed.
That's all right. We'll get it in the day.
Yep, I'll circle it, and we will do that first tomorrow. How's that?
Perfect.
All right. Well, before I get into our market update, I think it's time to talk about ChartCon. ChartCon's coming up in August. It is a completely online conference, so you do not need to leave your house. We have various ways for you to keep in touch with us during the conference, so it's still very interactive. Highly recommend you check it out. And we do have early bird pricing right now. You will get the actual videos afterwards, so you do get not only the attending, you also get the various recordings. But if you really want to enjoy this, you can come as a VIP and actually attend ChartCon. You get VIP seating right in the front row during the presentations. You will get to meet us. We'll have dinner. And like I've been saying, we do not hide out in our rooms. We are usually out and about. So you'll usually find somebody you can corner. And if you really want to get into it, we're all going on a cruise right after, and you are welcome to join us for an extra price. And I believe all these prices do include your significant other if you do that. So that's actually a pretty good deal on a 7-day cruise to Alaska. Plus, you get to hang out with all the ChartCon speakers and meet some of our families. I don't know about you, but my brand new husband is going to be going, and I think he wants to sit front row during all of the presentations to learn more. So we shall see how that works out. All right, let's go ahead and get into our market update. And I will get us started on that right now. First of all, I want to get here. All right, so let's look at our candle glance, and you can find this under your control center on your member homepage. And I love it because I can get everything on one page, but some of these I'm not quite so excited about because I want to see some other things. So you can just go right down here and make those changes very easily. All righty. So let's see what's been happening over the last 2 days. So Friday and now Monday. And you can see the Dow is lower. And one of the things I do want to mention is that we did get more buy signals on the DecisionPoint scoreboards, but the Dow is the one lagging. We still have not seen those positive crossovers. We need to update its scoreboard. Currently, the S&P 500 is trading mostly unchanged. We have the NASDAQ, of course, hitting new all-time highs as we speak. Technology is not ready to give it up at all. Russell 2000, we can see it is rising, but has started to consolidate sideways. We have the TSX is up slightly, rather choppy day of trading, but we are on the upside, maybe forming a flag here to go up and test these intraday highs. We also can see that Treasury yields are actually mostly unchanged. They have been trading lower slightly, or they have been lower lately. So at this point, we're reading at 28.90 as far as Treasury 10-year Treasury yields. UUP, rather choppy trading, but and right now we're down a cent on UUP, so mostly unchanged at 23.54. Commodities are certainly lower. We can see a big drop in a USO, but it is trying to make back some of those losses, but we're still looking at a 16-cent drop on USO. GLD, gold, gap down, but is trading mostly sideways at this point. We can see that the VIX is higher. We're getting readings now at just over 16, which is still rather low, but seeing a little bit of an increase could be it's showing people are getting a little bit more nervous. You can see bonds, TLT, we have a gap up, but now is consolidating, but still up 34 cents, reading at 118.25. Let's go over to our home page. Market summary, what's going on with our sectors. And actually, I'm going to show you a great sector chart in just a moment on our DP report, so hang in there. And as you can see, XLK, not a surprise, leading as far as the sector spiders, followed closely by consumer discretionary. Interesting, we're seeing utilities up there right now. Typically, we do see utilities at the bottom when we see technology at the top. So rather interesting. The industrials, though, are getting hit with a 1%, more than a 1% down on XLI. So it doesn't look like the Dow is going to be changing any signals at this point as far as DecisionPoint. Disk drives and semis network, all of these technology industries are leading, with disk drives up over 2% right now. Insurance, banks, and telecoms are the laggards right now. Insurance industry group is down 0.75%. And I'm going to take you to the DecisionPoint scoreboards quickly because we did have some changes here. So as you can see, we're looking pretty good as far as the S&P 500. The only thing we're seeing at this point is the PMO signal on the weekly chart. The PMO is still below the signal line. But the ones I wanted to point out, OEX, we did get these new buy signals that came in on Friday, but here's the issue. You can see the Dow has just not been able to pick it back up. And we're going to look at a few of these charts in the DecisionPoint report. But with that, I'm going to end our market update. And did you have anything you wanted to mention, Tom, while I get my charts together? Are you good?
Yeah, I'll go ahead and just pull up a couple charts while you get ready.
Cool.
First, I wanted to mention banks because you did indicate banks were lower today. Banks, this is a 1-month hourly chart, but you can see that banks got up to about 510 at the end of February. And earlier today, we did hit 510 and change. So we're up against a little bit of overhead price resistance on the banks. I think also if we look at the insurance, the DJUSIL, which is the life insurance index, we didn't quite get up to the high there, but very close. And the reason I mention this is that these are two groups that are very interest sensitive and typically rise when the yield is rising. And with both of them at or near breakouts, I find that to be somewhat interesting because the 10-year Treasury yield is still down quite a bit from its earlier high back in February when it got up to 295. It's sitting back at 289. So it's just a feeling I'm getting that the stock market is still putting money into, on a relative basis, both banks and life insurance companies, with the expectations that the 10-year Treasury yield is going to break out to new highs somewhere down the road. So that was it. I just wanted to point those out. So I'll let you take it away for DecisionPoint.
All right, let's do this thing. Okay, I'm going to take you straight over to the DecisionPoint blog to start us off. And you just can get to this from the blogs tab. You'll find that, and then select the DecisionPoint blog. This is the article that Carl just wrote on Friday. He does a weekly wrap, and he covers pretty much all the charts that I show you on Monday for the DecisionPoint report. And you'll see that I'm going to go through the charts, a lot of them on right from his blog. So understand that a lot of these are going to show, they're not going to show today's data. It's showing you everything that happened as of the close on Friday. I just wanted to be clear about that because I know some people get, hey, you're just showing all old charts. Well, in this case, you want to see some of these. Carl has put up all of the sector spiders here, as well as the SPY. And what he was noting is that we have a lot of double bottoms. And, you know, granted, typically you're looking at a double bottom where you've got the lows that are mostly at the same level, but you could still make a case here for these being, you know, that retest. And that's what he's pointing out. You know, this drop that we got just recently is likely the retest of those lows in February, and that at this point, breakouts will be likely. And we should see the correction over at this point. That's his opinion. I'm pretty much in line with that. I think there are still a few concerns I have, but look at technology, and you can see it's just, we're still taking off here. And as you've seen pretty much with all of our charts, we're looking pretty good. The interesting thing too is utilities are starting to look a little bit better here with that rising bottoms trend line. This is really excellent, and I'm going to get this from Carl because I do like, we changed and don't publish any spreadsheets anymore, but he's created this one. And I think it does give you a really good sense of what's going on as far as the sectors. This is our intermediate term trend model signals. These are generated by 20-day, 50-day EMA crossovers. That's how we get our intermediate term trend model signals. Long-term trend model is simply 50 to 100-day EMA crossovers. And that we use that long-term trend model to determine whether we're in a bear market configuration or a bull market configuration, because that changes how we should look at that chart and our expectations as far as you know, how patterns will execute or whether to expect breakdowns or breakouts. So as far as stocks, he noted a symmetrical triangle, and I think you talked about that earlier today, Tom, and we do have that breakout to the upside, which is a good thing. We've now seen that PMO buy signal come in. You've got rising PMO bottoms. So all of this is very positive. And at this point, having come down, I was looking for more of a double bottom. I would have expected, you know, your textbook double bottom where you would see the drop much closer, the test closer to that previous low. But I think he makes a good case. And for those of you who know Carl, he does tend to be on a little bit more bearish than I do. So when he starts to get a little bullish, that I think that's always interesting to note. So we see that we've got the cyclical bull market. He's got this on the SPY, the rising trend channel, and we've got another breakout right now as far as last week was concerned. And we did close at the high for the week, which is also very positive. One of the things that he notes, and that I must agree with, is that if you look at the daily chart right now, this particular rally off of this low is very, very steep, and it is starting to accelerate again. It's going to be very difficult to maintain that kind of a rally move. So we likely are going to see a move back down just to maybe consolidate, you know, a way to get to change this rising bottoms trend line that you can see is very, very steep, just from the low at the beginning of March and to where we're at now. That's a large, that's a steady increase, a parabolic almost. So we want to keep an eye on that because we could still see a breakdown. As far as the weekly chart, I did show you that. I'm going to go take you back over here to my indicators right here. And I'm going to look at our climactic indicators. These really only give us kind of a hint for what's going to happen. I look at these as very, very short-term kind of day trader type indicators to give you some market condition if you're, trading with very short-term trades, just to get an idea of, the expectations. And what I notice is that we had a spike here, some climactic readings and breadth readings. And what I look for with those is a corresponding break to the top of the Bollinger Band on the VIX. When I see both an increase in breadth and a penetration of the upper Bollinger Band, and remember I do invert my scale because I think of the VIX as overbought when we get these really low readings. I think of it as overbought in the very short term. So we did get these climactic readings. We did see the VIX come up and test the upper Bollinger Band. And that would have given me a bit of pause as far as what was going to open up this week. But we did end up seeing the VIX come back down. It did not break above that upper Bollinger Band. I would look at these breadth readings as a possible initiation over the next couple days that we will see prices move higher. Short-term indicators, Carl also noted we have very strong short-term indicators, and they are starting to get overbought. This, the STOB is, I would say, overbought. But as Carl noted, we can get higher. I mean, look back here when we had that really nice move, that V bottom move, the rally out of that bottom. And so we could be looking at a very similar situation. And you can see that we got readings much higher than what we're seeing right now. And so I would be looking, again, I think this is, with short-term indicators, there's still move to go higher. But they are starting to get overbought. And again, I mentioned the fact that with this very steep rising bottoms trend line, we are kind of due for a little bit of a pullback here, maybe some consolidation, just to get that rising bottoms trend line to be less steep. It'll be easier to maintain. And let's look at our intermediate term indicators. And here we go. And as you can see, I've been skeptical of these indicators, admittedly. But right now, when I look at the big picture here with these indicators, and I want to get this a little bigger for you guys. There you go. I see rising bottoms, and we have the positive crossover. Obviously, we weren't getting much information here when we were looking at these indicators moving mostly flat, kind of braiding, getting whipsawed around. But now we have a move, and it's gotten above that previous top on these indicators. So I think this is a really positive development. And given the PMO buy signal that kicked in and these rising bottoms on these indicators, I think that's very positive for the intermediate term. So let's look at UUP, the dollar. And actually, I'm going to go back to Carl's charts because I did like the ones he did for this. And as you can see, we're currently on sell signals for the intermediate term trend model and the long-term trend models. But things are looking up a little bit. I have been bullish on the dollar since we got this PMO buy signal back in early February. And, honestly, not much has happened since then. We got the double bottom, looked like we got a breakout, so it was more of a fake out breakout as far as the double bottom. But we're getting ready to come back up and test that overhead resistance line, and the PMO is still rising. So I am still bullish on the dollar UUP, and I would expect it to at least come up and test this declining tops trend line. I suspect we're going to see better than that, and the reason I say that is the weekly chart, I think, is looking really encouraging here. We have a declining wedge, a falling wedge, and that is a bullish pattern. The expectation is a breakout above that. And look at the PMO, very nice. Like I said, we're getting that sort of cupish shape. It's it's very clear hook to the upside. And also notice that bottom that we're just getting is now higher than that previous one we had back mid 2017. So I think that the dollar is looking pretty good right now. We haven't had the breakout from that declining wedge, so we could end up with another test and another move back down. But, you know, lots of touches here. I think it's time. It's definitely time for that breakout. Gold. I have been bearish gold. I remain bearish gold. The reason being is we have a declining PMO, not liking that. We have the double top, and granted it hasn't, I mean, it attempted an execution and then it ended up being more of a fake out. But I still think you could make a case for this as a double top pattern and a test back down. We're just going to have to see what happens if we can get that move below that 1310 level again. But I would say, looking at the fact that the PMO is declining, don't like it. Right now, you can see the correlation with the dollar is near perfect inverse relationship. And if I'm going to be bullish on the dollar, you know, with this kind of a correlation, it makes sense that I would be bearish on gold. Looking at the weekly chart for gold, you know, you have some encouraging developments here as far as the pattern is concerned. I think you could make a case for a ascending triangle, and that is a bullish pattern. But, you know, we hit that level of overhead resistance. We're heading back down. I suspect we're going to end up having to test this rising bottoms trend line again. If we're unfortunate, it'll go down and test this longer, more intermediate to longer term rising bottoms trend line, and that would be a bit more painful. But look at the fact that we've got a PMO now that is topped out. Granted, we saw this before, so we'll be paying close attention, but I am expecting to see gold falling at this point. USO, he's seeing a declining wedge using the top of a 2-year trading range. I think you could also make a case for a symmetrical triangle here, which is what I've been looking at. And a symmetrical triangle formation off of an uptrend, you should expect out of symmetrical triangles, they're continuation patterns. So you want to see a continuation in the previous trend. So we should expect an upside breakout here. The PMO is not looking great, but it is trying to turn back up. We have a possible double bottom here if you want to make a case for that on USO. Of course, we have quite a pullback right now. We know that because we just looked at the market update. We're getting down to the end, but I would say that I think that we're seeing an overbought PMO, and it is trying to turn down. So I think that would make me cautious regarding USO. TLT, both of us remain bearish on this. And granted, we got this bottom about 116, and we've been trying to move back up. But this double top is in play. I think it's still in play. And the expectation of this pattern is a drop that's lower. And if you look at the weekly chart, double top, haven't gone down to test that low. And look at the PMO, pretty ugly. I would expect prices to continue down on TLT. And whew, that's the DecisionPoint report. And I know we need to wrap this thing up. So basically, I'll put these summaries in the Market Watchers Live blog. It'll give you an idea of what I'm looking at as far as the indicators. But overall, my outlook for the stock market is mostly bullish. And as far as the dollar, gold, and bonds, oil and bonds, I think we have that chart too. But I will put that up as well, so you can see how I am doing as far as those four, the big four. So it doesn't look like I have that chart right now, so no worries. I will put that into the Market Watchers Live blog. And with that, let's finish this thing up. Let's wrap it. And I know we have the poll that's currently in the queue to see, is the correction over, is the question that we've asked our viewers at this point. And currently we're seeing that, well, there you go, 42% believe that, yes, we've seen the end of the correction. Right now we have about 266 pollees. If you want to go in and get your vote in, it's at the polls tab in Slido. You'll see it in the chat box. There's a click above the question box and you should find it.
Yeah,
and
yes, I'm going to say it's over. NASDAQ, new all-time highs. Russell 2000 right on its heels. I think it's over.
Yeah, I'm starting to agree with you. I was looking for another test of that February low, but I think looking at Carl's charts and reading his commentary, I think he's convinced me that that's probably that probably is the retest that we're going to see. So, and with that, what's happening this coming week? We've got a lot of interesting information. You're going to want to tune in. Everything Stock Charts is tomorrow. Greg Morris will be with us on Wednesday. Julius de Kempenaar, the RRG creator, will be with us on Thursday. And then I'm going to be doing a workshop on an unknown topic. Go ahead and give me your suggestions on what you might want to see. And you can do that by taking that survey.
Absolutely. And with that, it is a wrap. I want to thank everybody for joining us today. Please remember to complete the survey as you exit, as Aaron just mentioned. Just below your chat box there, you'll see a link under How'd We Do, and just fill that out. Give Aaron some suggestions for her workshop on Friday. That would be great. Let us know what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll see you back here on Tuesday. Happy trading.